IrrationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, you good people. Welcome back to the Rational Investors Daily Brief. Test. There you go. Right out of the gate, Brian's already figured up. Way to go, Brian. Woohoo. Anyway, let's try that again. Hopefully you can hear me all right. Happy Friday morning. Of course, Chris driving the bus here. Let's make sure I've done this thing right. Yeah, looks like we got actually you four people, right? Omar, Nore, David, and Giltz. It looks like you're the only viewers here this morning. We also have Nick and we have Adam in the Zoom call with us. So anyway, happy Friday morning, TGIF. I don't know whether that's a good commentary or a bad commentary on what we're doing here at TRI, but we'll say the market is awfully soft right now. Actually, as you can see from our S&P 500 breadth indicator, getting a lot of chop in here, which I think last time I talked to you, I kind of said that I would expect that this thing would roll over into the end of the month. It is eclipse season, so into the end of the month, which is the next sort of big eclipse event. Is probably what I would consider sort of our capitulation bottom. And don't be surprised if it's pretty chaotic out there. Usually the end of October is a good time for stock markets. I wouldn't necessarily say crash right now, but I suppose anything's possible. But I would definitely expect the bottom of the range to be tested. That's probably the best way to describe this. You can see on our breadth indicator, most recent reading as of October 19th. Yeah, we got the country funds pushing back down. Crypto in the medium term, interestingly enough, kind of puking out here a bit. Short term, still, I guess, uppy a bit to a certain degree. I did notice Bitcoin back up, testing up the right shoulder of the massive fractal that's been forming here over the past 6 months. I see a lot of people on social media basically saying this is it. We go straight up from here, no looking back, which is usually pretty dangerous. I don't really like when I start hearing the public talk like that. But anyway, the irony about this game is if you make predictions and you are right, oh, you look like a genius. If you make predictions and you're wrong, well, people usually forget about that pretty quickly. So anyway, I'm not really a big one on making predictions because quite often I put my money where my mouth is. And I hate to say it, but man, in this crazy chop fest market, a lot of stops getting run. In fact, actually, my trading partner for the opening range trade today, I think he told me he took like 3 or 4 setups today. I mean, I don't know how many, but just getting stopped at scratch, right, left, and center. Actually had a nice crude short on for that opening range trade, got stopped at scratch. As the market just kept coming back, didn't really do much. So it is Friday. I thought for the purposes of our conversation today, I would look at econs, but there just aren't any econs coming out. I suppose right now we're being dominated by earnings season. But the econ news very, very light here today. In fact, actually, where do we want to do this? Our demonstrator of best practices. Of course, everybody's journaling like crazy, right? So every goddamn day, you better be in there journaling. I was a little bit stressed out on Wednesday. And it might have been a celestial event into itself. I noticed that my personal stress level through this eclipse window has gone really up quite a bit. Had a really bad evening Wednesday night, Thursday morning, so I just gave myself permission. I had a terrible headache. I hate when I wake up with headaches. So I just said, look, you know what, I'm just not in a good frame of mind. So I'm gonna take a bit of a pause. Of course, Julian did the video yesterday. Hope that went well and you found some value in all that. And here we are Friday. So as you can see, got all my shit together. And actually, what I really like to do is I like to do my analysis of what I'm expecting to see in the marketplace. And then if I see the opening range trade happen to go in the direction of what the direction I'm thinking, I really like taking those trades. So anyway, we did have one this morning. Took the opening range short first thing this morning. Anyway, I mean, it was a fun adventure. I don't mind getting stopped at scratch. They always say scratch is second best trade. Suppose just to give you a bird's eye view of what that looks like. We came really, really close to a level where we could move our stops. Actually, this was as the trade was going on. We did hit this level. There's a question of should we be taking profits? Didn't take any profits on that trade. Probably should have. Hindsight's 2020. In fact, actually, in my Demon Finder, my journal entry today was, well, we technically had the 2-to-1 level hit. I didn't take some off the table at that level. We were a little bit greedy to had a couple more ticks we were looking for. So I think that went in as a Demon Finder entry. And you can see I got lots of Demon Finder entries. So if anything, it's good that doing lots of journaling and lots of logging, and if anything, demonstrator or best practices, you want to get over your mistakes, I would strongly suggest you start logging and tracking your mistakes and taking ownership of them. And it's easy to make mistakes in this game of trading. So, I definitely think the way the breadth indicator looks right here, I think is an excellent testament to this market state. Very, very difficult. And of course, buy when it snows, sell when it goes into market pivots. And I think we're finding some sort of market bottom pivot here. It's going to be choppy. In fact, actually, after I did the isn't that interesting? After I did the ORT trade, I just I put away the live account and just into sort of paper trading mode because I didn't really want to end the week on a down note. But was hunting an interesting level, candle body lows for trade location coming into options expiry and into the euro close here at 8:30, which is pretty typical. So the Europeans, they get run out at a certain level. As soon as they're done, boom, instantly the market comes popping back. I don't know how this trade's going to go, but as you can see on the ES, picked one. These are the micros. So 10 of the micros, I think, is equal to one big boy at this candle body low level. And you can see it's just sort of swimming around that level right now. Well, we'll see how it goes. Only time will tell. Stops against lows. I kind of like that idea. I will say though, broader market doesn't look very happy. This is probably more a function of what do the big boys want to do into things like the options expiry. This is a big one here too, right? This is triple witching. This is third Friday of the month. This is the monthly options expiry. So these numbers are going to be pretty big. I'd be curious just to see where the SPY, they'd like to ideally have this thing go out by the end of the day. So let's see. I guess they're marking this 20th event as a weekly options expire, although third Friday of the month, that should be an M there. I'm not quite sure why they've done that, but puts, woo-wee, look at this one, 420s. 159,000 open interest. Wow, that's a hell of a lot. So at 422, 43, interesting demonstration. I mean, this is basically everything that I try to teach people. In fact, actually, the level 3 program, they're doing this right now. Hopefully, you can understand in just very simplest terms. Is it in Wall Street's best interest to make damn sure this thing goes out above 420? I mean, that should be a very, very compelling argument to make that case. So, isn't I mean, because it is the monthly options expiry, you can see the book is thick, thick, thick. We always say that wherever the heaviest open interest is, that's usually the anchor for the puts, an anchor for the market. My hunch is they're not going to take this market out below that level, which actually that helps my candle body low thesis kind of idea. I don't really think they really want to take the market down below here. But we'll see. Only time will tell. This is the futures contract, specifically that options contract is based off of the S&P 500 spiders. So that's this bad boy. So 420, 422, and they're basically saying thou shalt not go below 420 here into the close. And interesting, that's basically where I have my stop on the futures. Interesting too how this is a gap level. Gaps like to be filled in, so it does make sense that over the next few days we probably will see this gap filled in. And of course, 418.31 is a Wyckoff check of the original breakout. So my hunch is they probably play around with it in here. They probably don't want it to go out below 420 into the ex-closer today. But I wouldn't be surprised. And if I understand correctly, I think over there in Israel, the Israelis are getting ready to initiate their ground offensive, whatever the hell that's going to be. I wouldn't be surprised if it happens over the weekend. So don't be shocked if maybe we even see that the market opens up with a gap lower Sunday evening, Monday morning, because unfortunately it's pretty nasty world out there. Also, too, Vladdy's been saying repeatedly that the introduction of longer range missiles into Russia was another one of his red lines, that if you crossed it, oh goodness, all hell break loose. So, the Russians are kind of got their backs against the wall. We'll see how things go, but don't be surprised if one day you wake up and it's like, oh my God, he did what? Who knows? He did what actually is going to be, but it wouldn't surprise me if it caused the market to gap lower. Also, too, you can see the market, this is the S&P 500 spider. The weekly chart has a big fat M top working. I mean, this is as big and fat and ugly as you're going to see. And theoretically, M tops, there's the chaos theory, Feigenbaum objective. That kind of makes sense too, because, speaking of gaps earlier, we said there was probably a high probability they fill in this gap. There's a big old gap down there as well that needs addressing. So notice how that's in that Feigenbaum. We got the 200 SMA, which is sitting also in that neighborhood. We have a good old mountain man, and I would be willing to bet dollars to donuts that this is probably 50% level. Good old Colin and his pump chaser gang. Well, probably somewhere in there. This, if anything, this is probably a good example where it tags Mountain Man and then jackknifes out of there, fills the gap in, completes the Feigenbaum chaos theory, tags this market structure trend line, which is coming back off of these lows. Well, that's not a bad trend line. I wouldn't be surprised if there's some support in there. And I have to say, the individual candle itself, I don't know how we're going to finish today. As I said, it is options expiry. I wouldn't be surprised if there's a bit of a short covering rally heading into the close so they can make as many of these options, especially this 425. There's 86,000 in open interest there. I'm sure they'd love to try and get the market back above that level. But absolutely, I don't think they're going to let this thing go out below 420. But I wouldn't be surprised if you see this thing mysteriously start to claw its way back into the latter part of today's session above that 86, above the 25 level, which is 86,000. Now, there's some really nasty anecdotes going on in the marketplace. And of course, like we said, this is Yeah, the hardest, easiest money you'll ever make. Well said, Ed. And he's one of our Californians. Although he's not from Southern California, so I don't think he talks with that accent. Anyway, and I tell you, man, I'm looking at property in Grants Pass every single day. If I go and pick up a piece of property down there, I'll be in your neighborhood more often than not, Ed. Anyway, um, let's see. So, if we look at FinViz as sort of like, I always like to just look at sort of what you can see that they're even trying to put a bit of a bottom in the Dow. Interestingly enough, it's the small caps, I think, that are actually under the most pressure. You can see the screen. Looks like, and I actually noticed that Oracle got really punched out hard here today. I noticed last earnings season, Oracle got hit pretty hard. And I'm seeing it again. I'm also seeing Allen. This is fascinating because Allen spat up a huge outside downside weekly key reversal signal, geez, about a month or two ago. And this signal is still working. I was shocked. There is the outside downside key reversal. And now, with us going through this low, is Allen smiling at us? Oh, God. I think he and his crooked teeth. The whole thing, eh? Or is that Brian in his crooked teeth? Or is that maybe that's Mr. Rhymes with Dink? Maybe that's him smiling at us. But anyway, you shake it. That looks like a double top breakdown, eh? So that low is 212.36. And our low here, 210.42. So the double top's in. And actually, I've told you guys this before. And if the good part about doing these videos, hopefully you just keep hearing the same message over and over and over. But check this out, right? This is such a cool example. When you get the market smiling within a smile. So there's the big smile, and then you get the little smile over here. Oh my goodness, that is such a bearish message. So I don't know whether you're a fan of Allen or not. I mean, frankly speaking, I don't even think he really cares about Tesla anymore. Just like I don't, ask him about PayPal these days. What's his opinion on that? I don't even think he even cares anymore about PayPal. But the point being that, man, doing some serious technical damage here on Allen today. I suppose my simple rule is if this really is a bear, then what we want to see is we want to see bearish market structure below these trend lines. Having said that, one high, two highs, three highs. Ironically enough, we could even entertain the idea of bearish harmonic patterns. Doesn't look like we've gone beyond 66 here. So where's our bot set up? There it is. Yeah, it looks like it's perfectly valid. So how ironic. This is total market darling. And everybody loves it. Fascinating. We had that outside downside key reversal, which sort of kicked off. Now I think you can actually start justifiably thinking, yep, look at that. Isn't that cool how the 25 level basically sets up off this M top and one high, two highs, three highs. I think that bigger short trade idea is in play. We said it's going to take us to zero. I don't know about that. Not quite sure about those numbers. I'd probably want to maybe change this to a log chart, which of course is going to skew everything, I should say. Actually, you know what? There's an easier way to do this. Let's go. And, I think this is why a lot of people sort of go, well, Brian, the reason why people don't watch you is because you don't prepare ahead of time. But anyway, I just pulled this chart up and I'm having fun with you guys. So if we go that, and then we change this to fibs off log scale, and then actually we're probably gonna have to just get rid of that. So let's go back up here and let's see what Alan's telling us he wants. So boobity boo, boobity shmoo. There's the awesome TRI weekly key reversal signal. And tell you, man, that's worth the subscription alone. Just this one trade could have easily paid for a year's subscription to this service. But anyway, and you're not going to find these key reversal signals anywhere else online. People just don't know about them. 299.12, 299.10, pretty close. All right. All right, so let's put on here the butt levers. Boom. There we go. All right, so what does this tell us? This tells us that the 25 entry level was this M top. So if you did want to participate in the trade, you're going to have to wait for some sort of counter trend rally, underside kiss of that level, if it does even happen. Which, if anything, makes sense, Greg, because I said for me to actually get an outright sell signal here, I need to actually start seeing some like bearish market structure on the other side of these trend lines. This thing might just puke right out now. But what's interesting is, holy crap, look how far down the stock objective is of this bot, all the way back down to 70 bucks a share. Wow. So mark that one in your calendars, folks. That's an interesting chart. That's probably, tweet worthy. And actually, what's kind of interesting? I do a lot of this kind of weird stuff. Like I think about 7 or 8 months ago, when you should have been buying all the crypto names, I just put out a tweet, same sort of thing, exactly what I just did with you. Threw up a whole bunch of fun lines and start making grandiose predictions. And actually, this one is a really easy one because when the market's against the bottom end of the range, just looking for 38.2s, 50%, that kind of stuff, it's actually fairly simple trading. It's not outlandish price objectives. But Josh just went and grabbed this and he was like, Brian, do you realize what you're doing here? So 7, 8 months ago, buy when it snows, it's all snowing, and no, just giving away crypto. You couldn't like literally give this away. And I put out these tweets here, like, geez, this is like shooting fish in a barrel kind of thing. You just go in here and buy these crypto names against the bottom end of the ranges, and 3 out of 4 of them have already spat out doubles. So this is the same sort of thing. I don't know what's going to happen. We're statisticians. It's not 100%, 75%. That's not bad odds. But I would say the same thing here. The setup is fired. The levels are working. And of course, key reversals. And, the irony of it all is this thing's already trending down. So all we did was just bang right into a down trend line. But wow, look at that number. That shocks me. If that actually happens, that is going to be just a most horrendously huge trade. I don't know what would cause something like that. Did hear that Toyota is coming out with an ammonia engine. Have any of you guys heard of that? I thought that was fascinating. And the headline is Toyota's ammonia engine is going to make electric vehicles completely obsolete, which I thought was fascinating. Yeah, so Nick over here in the Zoom call says, "Yep, game changing according to them." I don't know, maybe it's something along those lines, but wow, what an image! Didn't even really expect that. I was not. There is Toyota stock. You heard Brian bitching and complaining, and this is actually the exact opposite scenario. This is a W within a W. Remember, I had said earlier this was an M within an M. This is a W within a W, hugely bullish event right in here. Take a screenshot of that if you could, folks, because that is a beautiful sort of textbook definition of how to trade these. And maybe Chris make a note of this, whether it be your, if you're a bull, you want to look for these W's within W's. Something along those lines. And remember, I still have my bid working down here. Farmers never got filled. I'll drive you crazy. And then on the bear side, the exact opposite. M within an M. Absolute textbook. Abso-freaking-lutely textbook image there, folks. Can't tell you. All right. Are we actually planning on doing a after party today? I don't know. I can't remember. All right, look at that. Market's catching a nice bid here. As I had said, I do like the idea. Candle body lows of them lifting the market. And of course, we also talked about the put options expiry. I'd be willing to, and actually it might be even fun just if you're watching the market through the day, keep an eye on this 425 level on the SPY, because I think that they probably want to get that up. And it's not even that far of a stretch, but I think they want to get the market back up here. And actually, this is an interesting commentary too for anybody who's taken our TRI education program, the level 2 program. We talk about moving averages, and usually on a moving average cross, which it looks like the 13 EMA and the 30 SMA are about to do, there's usually a check of the trend. So interestingly enough, you might actually find that this is as worse as it gets, and actually over the next week or so, they lift the market back up. That wouldn't surprise me as well either. So suppose just to finish off this conversation with you guys, what the hell's going on with this crazy Bitcoin? Bitcoin. As I had sort of said earlier, I appreciate that everybody and their brother in social media is uber bullish and we're just going straight to the moon, but I'm not buying it just yet. I still think that we're doing this head and shouldersy type pattern. Call me crazy. If this is for real, I want to see this volume really ramp up here, please. So this is a really interesting location, like for those people that are professional shorters, they wouldn't surprise me if they take a shot in here. Look I'm willing to take a shot short, and I'll risk against the highs, maybe even hunt candle body high for trade location. We're heading into the weekend, so it should be an interesting event through the weekend. They might even try and pop it up top through the weekend. So enjoy the ride while it lasts. What I find interesting as going through the rags is you notice something like Ethereum. Where's the bull here? So is it just Bitcoin? I look at Litecoin. Does that look like a bull? What's going on here? There's something wrong with this picture. And of course, the funny little darlings that we've been following recently. There's some fun little names. We were picking this one apart in a recent Afterparty show, and maybe we'll circle it back around. I still like the idea of working bids here, but you can see 78.6, Brian's favorite fib. Wow, what a level. Holy crap. So, I do like the idea of buying down in here on these names. And I think we also did this Civic, hasn't quite come down. And I know Chris's BNT, I would like to see this thing come back down. Can't really do much on that. So I'm not seeing like a runaway bull market on the altcoins. There might be individual names like Link here is looking interesting. Is this setting up a bullish bot? Maybe. But I'm not seeing the overt bullishness that I'm seeing out of the old corn. And something is suspicious about this. And, I'm from Missouri or wherever, whatever bloody state it is. If you're a bull, show me. Like, this is an interesting commentary where we always say, show me a new high and I'll show you a buy. That's specifically in reference to this as a contract high. So if this really is a bull, believe it or not, I actually need to see Bitcoin get up through this high, which is 31.8 on the futures contracts. And this is actually a futures contract. Did we just bang into some levels at which the professionals would maybe think about shorting? This big wicks and tails like to be eaten. That was the whole, rhymes with dink guy, that funny news release about his ETF. This is also one of those 1.618s. And I've told you, you ever see this 1.618 level, look for reversal. So this is also ATR level. And oh, gee whiz, look, we got 8s and 9s on the time to mark. So at the very least, we probably should expect some sort of consolidation. So there's no way in hell I could be a buyer here. I'm a little skeptical looking at the rest of the market. And I don't know. I mean, call me crazy. If this thing is going to work its way higher, A, B, C, D, maybe we get a push up top here. But for me to actually think this is an outright new bull market, we've got to go and break to new contract highs. And what that means is we got to go up and eat this wick. How many trap bears up there that are just cursing themselves because they bought up there are just desperately waiting to try and be released? And I think that's what's happening right now. So can I be a buyer here? No. Is it an idea to take short shots if you get a half decent M top up here off of like lower time frames, it's not a bad idea. The only problem is that's usually politically very incorrect. And I don't really have any M's yet. I mean, what I'd ideally love to see now with this atom top is, can we come up here, make a nice M, and then fail? If we see something like that develop over the weekend, you're probably going to hear Brian talking about hunting shorts. So, all right. Why don't we leave the summary at that? We'll go on and have fun in the after party. PMA for the win. Slow and steady wins the race. All the best, and bye for now.